Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 dividend stocks that analysts rate a strong buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope you are ready and excited for the new year. And just a reminder that the market is closed on Monday for the holiday. And there's just a few days left in the TipRanks holiday sale where you can get 30% off premium and ultimate subscriptions. So if you want to unlock some fantastic research tools, head on over to the site now to take advantage. Now today we're taking a look at 3 dividend stocks. These all come in with a strong buy consensus as well for some potential future growth. We found today's stocks using the TipRanks stock screener. Found under research tools, today we use the stock screener to look for a stock with a high or very high dividend yield, a strong buy consensus from analysts, and an outperform rating on the TipRanks Smart Score. And that narrowed us down to our list here. And our first strong buy dividend stock is Merck. They trade under the ticker MRK, currently priced just shy of $109 per share. Now, the past year, they did see a lot of cooling off here headed into the winter, and overall are up just 1%, but they've been climbing back a bit in this past quarter, gaining 7%. Merck is a leading global pharmaceutical firm with a network of both sales and research. With a market cap of over $276 billion, they were the company that originally created the widespread MMR vaccine that protects newborn infants against measles, mumps, and rubella. In today's market, they're probably best known for their products like Gardasil and Keytruda. In the first 9 months of this year, they've had sales of over $45.6 billion. And in their most recent Q3 earnings report, they did come out with a beat at $2.13 compared to the $1.95 expected. Also saw revenue come in at $16 billion, which was a 7% increase from the third quarter of last year. The company boasts a solid track record of dividend payments as well. They've been paying out since 1990, so nearly 34 years. And their current quarterly dividend comes in at 77 cents per share for a dividend yield of 2.7%, well ahead the sector average of about 1.5%. Their stock currently has 15 analyst ratings, coming in as a strong buy with 13 buys and 2 holds. And the average price target comes in at $126, which would be an upside potential of over 15%. Down below, we can see our most recent ratings, including a couple holds with upsides of 5 and 6%, and some higher-end buy ratings with upsides of over 23%. Our second strong buy dividend stock is ConocoPhillips. They trade under the ticker COP, currently priced at $116 per share. Now, overall, they are up 2.6% in the last year, with gains of 14% in the last 6 months. ConocoPhillips is a leader in the oil and gas industry. They consistently rank among the largest independent exploration and production companies in the oil sector, based on a combination of proven reserves and known production. They operate in 13 countries, employing a workforce of nearly 10,000. The company offers both a fixed dividend and variable dividend that changes depending on the company's performance. Their most recent dividend came in at 58 cents per share for a dividend yield of 3.3%. And that dividend amount was increased by 14%, which they announced in their last quarterly results, where they did also come out with an earnings beat. For their third quarter, they reported revenue of $14.26 billion and earnings per share of $2.16, beating expectations by 4 cents per share. The company noted that for the third consecutive quarter, they achieved record production, and with the purchase of the remaining 50% interest in Sermont, raised their full-year guidance. The stock does come in as a strong buy, with 18 current analyst ratings, breaking down to 14 buys and 4 holds. The average price target is just shy of $140 per share for an upside potential of over 19%. Most recent ratings coming in do include low-end price targets of holds around 2.7% and some high-end price targets north of 40%. And our third strong buy dividend stock is CVS Health. They trade under the ticker CVS, currently priced at $79 per share. Now, over the past year, they are in the red, down 12%, but have been climbing back recently, up 16% in the last 6 months and 14.5% in just the last 3. CVS, of course, is known for their retail pharmacy chain. They have over 9,000 pharmacy locations, including those in Target and Schnucks grocery stores. The company also manages pharmacy benefits manager Aetna. And this is another company with a long track record of dividend payments going back to 1989. Their current quarterly dividend is 67 cents per share for a dividend yield of 3.07%. Their latest earnings report came out near the start of November, where they did have an earnings beat but had to lower some of their future guidance. More recently, they had an investor day where they provided a bit more of an upbeat outlook. They did reiterate their 2023 guidance for this final quarter, but on top of that, they projected their 2024 revenues to be at least $366 billion, which was well above analyst estimates. They also upped their quarterly dividend by 10% as well. Their strong buy rating is based on 18 current analysts with 14 buys and 4 holds, with the average price target coming in at $88.53 for an upside potential of about 12%. Looking at our most recent ratings here, we do have a hold from the start of November with a slight downside of nearly 4% and a high-end price target up above 25%. So that is a quick look at 3 strong buy dividend stocks. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at and providing some insight and entertainment. So please make sure you always do your own research and due diligence. Thank you so much for watching. Have a fantastic day, and I'll see you back here next time.